Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You already know. Like, subscribe, notification bell, all right? So let's talk about a lot of things pertaining to the jobs numbers that we got today. It's going to cover stocks and crypto, all right? Let's go. Hey, so today is brought to you by Stock Up You, where you could learn crypto and the stock market, okay? Let's just go right into it, good people. So we had the June jobs report, and as you could see, you can get a snapshot of everything without playing the whole video. I won't bore you with that. Look at this. June job reports. U.S. labor market adds 206,000 jobs. Unemployment rate rises. Okay, so you can see here, U.S. economy added 206,000 jobs in June. Unemployment rate rises to 4.1. What is that telling us? 4.1. What is that telling us? It's telling us that the June jobs report adds to signs that economy may be cooling. The economy may be cooling. Now, of course, that's what the Fed was looking for the economy to cool. And one of the key indicators that shows that he may be cutting interest rates or reducing interest rates was for the jobs to slow down. Okay. And so high unemployment means, just that. Now, next week, we have CPI and PPI again, consumer price index, right? And producers price index. Now, those coupled with the June jobs report will give us enough data to kind of see what the Fed is going to do.
Yes, the headline number for June was higher than we expected at 206,000. But if you look at the private sector number, which was meaningfully lower, and a lot of job growth accounted for by healthcare, once again, with some weakness in the cyclical sectors. Alongside that, some big downward revisions, as you said, an increase in the unemployment rate to 4.1%. All of that means it's a decent report, but it is a bit softer overall than I think widely anticipated. The more important report is probably next week when we get the CPI for June in terms of what the Fed's going to do. But I think this does support the idea that they will cut relatively soon, and we continue to think September is the most likely.
That was Goldman Sachs' chief economist, and you heard he repeated what I further said, what I previously said. But now, before that report, there was a 50-50 chance of a rate cut by September. After the June jobs report, that went all the way up to 75%. So now there's a 75% chance that there will be a 25 basis point rate cut by September. And of course, we have to wait till next week to see what the data from the CPI and the PPI, especially core CPI, is going to say. Of course, this keeps coming every month, and then there's core PCE, right? Let's listen a little further.
JP Morgan Asset Management Chief Global Strategist David Kelly. David, great to have you with us. What's your take on that move we've seen in the 2 year? Do you think it's a bit ahead of the skis in terms of how many cuts we might get?
Not really. I mean, I do accept the point that on a Friday after 4th of July, don't necessarily trust what's going on in terms of trading. But overall, we think that things are setting up for two cuts this year, one in September, one in December. What we're seeing is the economy is cooling, but it's cooling slowly. That's very much the theme in this jobs report. I sort of echo what Steve was saying about it. I think it's significant they downgraded payroll job growth by 111,000 for the prior 2 months, and also that drop in temporary workers. These are signs that the economy is just gradually decelerating here. And we're also seeing signs that, despite a tight labor market, it's still tight with an unemployment rate of 4.1%. We're not seeing wage growth come out of that. So next big headline will be next week's CPI report. We think we're going to be down to a 3.2% year-over-year number. And that should push the personal consumption deflator down from 2.6 to 2.5 year-over-year. So we're edging ever closer that Fed's 2% target. I think that's enough progress for the Fed to begin to cut in September.
Now, that was JP Morgan's asset manager, and he expects 2 rate cuts, one in September and one in December, as you heard the gentleman. I believe he said December. So he's expecting 2 by the Fed. I don't know. No one knows. No one can see that far out because we don't know what the CPI and the PPI numbers are going to be. We've been surprised so many times. It also being an election year, I believe, like the data I showed you since 1949, that November winds up being a good month. Now, we could still have, in spite of what this gentleman says, we still could have a cool off leading up until October with the stock market, okay? So just be looking out for that. And if it does happen, if we do have a 8 to 10% drawdown from now until October, then that's to be expected. But then November in an election year, we still, historically since 1949, close the year higher. So don't panic, okay? So now, here's another thing. We want to see what's going on with crypto now. We don't know if we're at the bottom with crypto. If we look at the time of filming this, we're at 56K, okay? Now, I also want to straighten something out that someone made a comment on yesterday's video. 2 days ago, I said this, and I just want you guys to see, because this is not Larry being right. I just don't want you guys to panic. Now, I don't know what's going to happen from now until Tuesday with Bitcoin, because we know sometimes Bitcoin moves over the weekend, mostly late at night, and then we have moves on Monday. But let's listen. Bitcoin has broken beneath a 60K, beneath it, which is not good. And the truth be told, it could keep falling, right? It could keep falling and come all the way down, I see, to 56. Some say 55. Some say all the way down to 54. So we could blow past 57 and we can come all the way down to 54. I said then we could come all the way down to 54, and I further go on to say I'm going to buy more at 54, which I did. Now, some of my stop losses triggered in profit, and then some it didn't. Bunk kind of held pretty good. If for those of you that had bunk, it actually held pretty good. Now, there's a lot of talk about how low Bitcoin will go. And the truth be told, no one knows exactly. It's just going to be a guess. Now, we see they had a flash crash all the way down to like 53.5-ish, okay? 53.5-ish is a 53.4-ish, 53.5-ish is where it had a flash crash down. It didn't stay there long, and it got right back to the 56 that I saw. So I saw 56. If you panicked at 56, it flashed back down and came back up. But I did say it could go down below 54, and I said I was going to be buying, which I did. I start buying more. Okay, for those of you that are asleep or at work, make sure to know that you could set your stop losses on crypto, but you can also set your buy orders, right? I pull a chart out for the week, pull a chart out for the month and 3 months, and then I set my buy orders, especially on these meme coins, at the absolute bottom. If it doesn't trigger, so what? But if it does, then you also bought there. But I do the polar opposite when it starts running high. I want you guys to listen to this.
Tanea McKeel is tracking the action and joins us here with more on what's driving these declines. Tanea.
Yeah, Leslie, it does not look pretty. So like you said, Bitcoin taking another leg down, falling to a February low of about $55,000. This move was pretty well anticipated. The trustee of the defunct Mt. Gox exchange has begun repayments to creditors, which it said last week it would start sometime in July. So that had some in the market concerned that creditors would be selling some of that Bitcoin this month after waiting more than 10 years for a resolution. Mt. Gox went bankrupt, of course, after a major hack in 2014. So that is hitting the market in a bigger way right now. I like how Zach Pandel from Grayscale framed it the other day when I spoke with him. You think back to how closely we've been watching the Bitcoin halving this year. That was a known positive supply event. It lowered the amount of Bitcoin supply being produced, and now we we have this other source of Bitcoin supply coming in and sort of negating those positive effects of the halving in the short term. And it is not just Mt. Gox. The declines really began last week when the U.S. and German government sent large amounts of previously seized Bitcoin to exchanges. So, you're seeing Coinbase and MicroStrategy stumbling, and of course, miners across the board are down. And in the past 24 hours, $152 million in long Bitcoin liquidations in the derivatives market. But again, this is just, a short-term move, nothing that fundamentally alters the positive long-term outlook for Bitcoin, which still has quite a lot going for it. And then 57K has been the key support level to watch. That has, of course, now been breached, obviously, and if it hangs here for too long, then 49K would become new support.
So we have governments, dumping Bitcoin. We have the Mt. Gox repayment, and we don't know if those people are going to sell. That's what the fear is, that all of this extra Bitcoin is going to come into the market and people are going to sell, causing the price to go down. Now, some may think, or some may say, that this is an overreaction. I believe at this point, the Mt. Gox dump, I'm going to call it, has been absorbed. I believe that the countries that are dumping, I believe 80% of that has been priced in. Okay. Now we got to see how much selling goes on. Long term, I see Bitcoin still going up. That doesn't mean it's going to happen. Anything I say is not a suggestion for you to buy, hold, or sell. But I just want you to think about this. Once the interest rates start to go down, then that's going to be a green light for crypto to go up. Crypto performs better when interest rates are low. It performs worse when interest rates are high. If the one gentleman is right and we get 2 this year, then we will have a good 2025 for Bitcoin, altcoins, meme coins, all crypto. All right. So make sure you check out the links below and have a blessed, wonderful, and safe weekend. Leave me a comment if you agree with anything I said or shine a light on something you did not know. Right. Live, love, laugh, and learn. Also now for the class, you could pay as little as $44 a month. You could buy now and pay later by using Afterpay, Klarna, and Affirm. So there's no reason for you to miss out. We'll see you later. Live, love, laugh, and learn.